I want to point out a couple of common sense things about the precious metals versus the mining stocks. I do think the mining stocks are going to go up a lot, but I generally would not tell a smaller investor, which is basically anybody on YouTube, I'd imagine, not to go into the mining stocks too much. The reason being, and I'm going to say this, say for instance you had $3 billion in cash or 3 billion euros in cash, and there are people around that do have that kind of money, just in a CD. For instance, you have the silver mined per year, 736 million ounces here, $35 an ounce, as I stated before, 25.75 billion dollars, of which only about 25%, if you're lucky, is available to invest in an ETF and coins. So you might have $6 or $7 billion that you can actually invest in. Well, that takes care of about 6 or 7 multi-billionaires if they have that much money laying around. People with that kind of money have problems. I mean, I'd imagine it's very tough to keep that kind of money, and they would be looking at mining stocks because there's a hell of a lot more investment area, and the stocks they are looking bad in some areas. I know some mining stocks are looking bad, but it could be just like the rare earth metals. They were sitting for a long time, just stagnant. Then all of a sudden in September of 2010, some of them went up several times in 1 month. And that's the same type of thing that can happen with the mining stocks. But people with a lot of money, you're not really going to have much of an opportunity to get into silver. And they're not going to buy it at a high price. They're not going to buy it at $400 an ounce or something like that. They will, because they'll be scared that it's hitting near a top. They're not going to do it. So they can only. That's why you'll see people like Soros or Warren Buffett knocking the metal. They can't put their money in this, so they don't even have this opportunity. This is really only an opportunity for smaller investors, and the percentage growth you can get could be much higher than somebody with a large sum of money. I mean, large, and we're talking billions of dollars. They actually have, a lot of problems managing that type of money. So they will go into many different areas, and that is one reason you might see certain areas of the stock market go up. And I'm imagining it's going to be in oil, it's going to be gold stocks, silver stocks, and not every one of them is going to be a winner. It's also probably going to be in agriculture and actually things that people that are essentials to people. If silver is going up in price, quite obvious the silver miners are going to be making more and more money, and it is a card game. They will pour money into the stocks, and you will see the stocks go up too. But for the small investor, you're better off just sticking with the coins, because, like I said, the people with the billions of dollars, they just have too much money to invest, and to get in there at a low price, they're just not going to be able to do it because they have astronomical wealth. And sometimes, I laugh at that story that Lindsey Williams stated about the elite. He saw a truck that was armored truck, and the guy told him there was gold in it, and that's how the elite carry around their money. Well, the real elite, really, I'd imagine they're probably going to go more into like oil and agriculture and things like that. There's going to be a whole host of things that if there's a global debt crisis and you're not going to be holding your money in the actual banking system in certificates of deposits and bonds and government bonds and things like that, and you need to find another home for money, it's going to go into a wide variety of commodities, I would think. I did hear something, and I was listening to, I think he was the one who owns the Northwest Territorial Mint. He made some comments about silver not being in a short supply. I want to apply a little common sense to my observation. He was giving an example that if you have a restaurant and there's a line around out the door, you still have plenty of food, and it's just there's a bottleneck to get the product out to coins, he was saying. Well, looking at this restaurant example, well, if you have a line that goes around a block and you only have a few hours during lunchtime, I know what I would do if I was the restaurant owner. I'd raise the price. So, I don't think his argument that in a way there is a shortage, and if there's a demand for coins, and if they can't supply them fast enough, the coin premium is going to go up or something. So, yeah, I know what he's saying about there's probably plenty of silver in the ground, but it's just like anything. If you can't get it out fast enough, price goes up, right? So I sort of disagree with that statement he was making, and I just wanted to point that out real quickly. Brother John, he gave I was watching his channel today, and I just want to repeat something he said because I thought it was good, and it was about this Silver Institute numbers they came out with. And actually, this is not off the report itself, but it's some statistics on supply and demand on silver. And just to go over real briefly, it goes through year 2001 all the way to the year 2010, and they have this like balancing account, I might call it. So the debits equal to credits, supply equals the demand. So it's a implied net disinvestment if your demand is higher, so than the supply, or your implied net investment, showing that the supply went into some other net investment. What he pointed out was if you add up everything from 2005 to 2010, you get about 440 million ounces. And I did find this interesting because this is a very good catch. You get about 440 million ounces. I just threw this in Excel so I get the exact number, 438.5 million ounces, whatever. And if you look at the report itself, they make a statement in here that the ETFs were first introduced, exchange traded funds backed in silver, were first introduced in 2006, and in a space of 5 years to the end of 2010 that absorbed 603 million ounces. So where did the 603 million ounces come from? The implied net investment is for all those years is 440 million ounces. Because everything else they account for, silverware, coins, jewelry, photography, industrial applications, where did it come from? Then in addition to that, there is, and this was actually off, I just put this in Excel so you can read it a little bit better, the European dealers bullion stocks. From 2005, it looks like there were, 290 million ounces, and they went up to 570 million ounces. So you had 870 million ounces from 300 million ounces, say. So you increased about 570 million ounces inside of 5 years. So that's almost, when you take the 570 million ounces plus the 600 million ounces in the ETFs, you have almost 1.2 million ounces. But when you're looking at these numbers, implied net investment, now Brother John F., if you look at his channel, he found this, he caught this on his report, and I thought this was excellent, and it bears repeating. The implied net investment, according to these numbers, is 440 million ounces. Yet somehow ETFs absorbed 600 million ounces, plus the European dealers absorbed, say, 570 million ounces. It's kind of rough to judge what this chart is, but this dark green on the bottom represents the European dealers. So it does make you wonder just how much silver is in the ETFs, unless I know I do accounting, so maybe some of these other numbers are way the hell off too. You know, because you really don't know what's behind it. But that is a very, very good question. And it does make you wonder. So you're better off buying the coins and have them in your hand. You know what the hell you got. That's the most important thing. And as far as the mining stocks in the metals, they probably will go up because big money has to find a home. They really can't buy silver coins where it's going to be a large percent of their portfolio. They got so much damn money they got to find. It requires a lot of research where to put it, where you're going to get the best returns. So they will go into stocks of mining and probably stocks of oil and things like that. I know, Warren Buffett. I don't think he's the. I don't know how that guy made money, to tell you the truth, because I don't think he's that great of an investor. But I think he's very smart in what he's doing with the tar sands in Canada, and he's put a lot of his money into there. So yeah, I think that's going to be a big winner for at least a few years. So they got so much damn money, they just can't go buy a bunch of silver coins. There isn't enough silver coins out there, and they're not going to buy them when they're getting super high in value because they're going to be afraid it's a bubble. So you know what? To tell you the truth, you're better off in percentage terms. The small investor that invests heavily in the silver coins and some of the gold coins and the platinum and the palladium is going to do much, much better as a percentage return than the biggest investors.